Hello everyone, today is the 21st of May 2026 and in today JustDario daily episode I cannot avoid to bring the attention to the latest episode of incredible price manipulation in the oil futures market that we observed on Wednesday and share my views on why I believe what we are witnessing is perhaps the last innings of the great oil price manipulation scheme before this stops warning when eventually reality cannot be hidden anymore. Before we begin, don't forget to like the video, subscribe to the channel, and turn on the notifications if you don't want to miss any of my future updates. All right, so let's begin with what happened yesterday. At 10:30 Eastern Times, the latest EIA US oil crude inventories report was released, and the data that came out of it was utterly shocking, or that was what it was supposed to be effectively. And as you can see in this chart, yesterday was the largest drawdown in crude oil inventories, combining commercial and strategic petroleum reserves, ever recorded in history since data started to be compiling in 1982. And here you can observe the details that have been released with a crude oil drawdown of about 18 million barrels last week, and for a total stocks inventories drawdown of almost 19 million barrels, combining crude oil and products. And what's noticeable is that you can barely see any positive change in that table whatsoever. All those few positive changes are barely above the upper line at all. But you know what? Of course, like this data were for sure available to those in charge. And you might have been expected a very bad market reaction when this news hit the tape. So 15 minutes before this really gloomy report was released, we got incredibly timely fake news that hit the tape. And here is what it says. Evan source, work is underway in earnest to put the finishing touches on the text of an agreement between Washington and Tehran. Wow. I mean, this might be the all time lows of fake news because anyone with a couple of grams of brain can quickly observe how this headline by itself is odd, to say the least. But nevertheless, all the news aggregator account on X started reposting it right away. And not surprisingly, the market reacted. Here is the particular thing. This fake news reported by this Haladat account was so fake that nobody else, including Axios, dared to report it. I mean, it's so blatant. And this account is not even any particular like major news provider in the Middle East or in media in general. It is actually a news aggregator account by itself that runs very sketchy website, an X account with a decent follow, although this follow like picked up lately, and a rather popular Telegram account. What's interesting about this is that you see this post right on the screen. If you go check their website and their Telegram accounts or the other channels they use to distribute news, you cannot find any trace whatsoever of this headline. And here you can see the exact timing and impact on the chart. I mean, when that headline drops, the market right away started to move and oil price crash below $100 immediately. And then when 15 minutes after the EIA report drops and the headline follows, for example, this is an incredible headline: use crude oil and gasoline inventories fell last week on strong demand. The market briefly caught up to then start dumping again because, of course, at that point, momentum trading algorithm caught up and they had to follow suit. And what would I like to highlight in this headline is what I exactly tried to emphasize in my latest video is that there is no demand destruction whatsoever. So far, everything in the market, the oil shock that is spreading and worsening day by day with every passing day that the Strait of Hormuz doesn't reopen, there is no demand destruction whatsoever. It remains strong because everyone from commercial to strategic reserves is draw down inventories very quickly on the false expectations that this situation can swiftly be solved and everything goes back to what it was on the 27th of February. While the reality, to be fair, is completely different. And still, even if many people like to ignore it because they rather follow the very bogus price momentum in the market, sooner or later, perhaps very soon, because otherwise we wouldn't be here discussing about this, a brick wall will be hit and the reality will not be possible to ignore any longer because you will go to the gas station and you know what? The price is going to be much higher, and perhaps even if you're able to pay that price, it's not going to be enough gasoline in the tanks. Here was the market reaction. As you can see, incredibly bullish. Oil started to tank, the stocks jumped immediately, and the US Treasury yields tanked of 10 basis points as a result. Even if towards the end of the day, things started to converge, albeit markets closed on a very positive tone for the day. Even after several hours, it was pretty clear that this was completely fake. And even Donald Trump himself said that he doesn't rule out the option of striking Iran again at all if they don't, as he said, decide to be smart. However, there was one exception in the market overall, and this exception, incredibly, was the Japanese yen. As you can see in front of you, the Japanese yen was the only asset in financial markets that didn't benefit whatsoever from the snap in price momentum that turned from bearish to bullish, even if it didn't make any sense whatsoever and clashed greatly with the reality. And here is my view about this. The view is that the situation in Japan is so bad that even if this doesn't work any longer whatsoever to give some respite to the financial stress the country is experiencing, then we need to keep our eyes very open, because the government can intervene again, but clearly the market is not swallowing any positive, narrative, of course, fabricated, and any sort of nonsense that came out from that corner or the globe in order to boost, you know, their standing in the market and try to ease a situation that is worse and worse in Japan. Because let's not forget, besides their massive and mounting financial trouble in Japan, they're also a country that imports the vast majority of its oil and oil derivatives. Hence, it's very, very um, on the forefront of the damages when the oil supply shock is going to hit the hardest. Yeah, I conclude. Thanks a lot for listening to my update today, for supporting me on X, on Instagram, and for reading my research on JustDario.com. In particular, today I just published an article where I reviewed the latest um, NVIDIA earnings that came after the bell, and I suggest you to take a look at it. I decided not to share that update here on YouTube because it's very technical, and perhaps it might just be appealing only to very few of you. So I became mindful of that. Thanks a lot again, and have a nice day.